In this video, SMB co-founder Steve Spencer teaches you how to capitalize on the trading opportunities from President Trump's win. If you want to be profitable in 2025 and beyond, you will find enormous value in this video from a special market veteran. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005 and now Miami as well, and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from an SMB co-founder so you can grow your trading account.
Trump has been elected president. Trading rule number 1. We do not allow our politics to determine our trading. Our job as traders is to capture market opportunities, and bringing your own personal beliefs into that equation is a recipe for disaster. You may have been hearing a lot on the news about something called the Trump trade. Said shortly, what stocks will move the most now that Trump will be president? Said in trader parlance, what stocks or sectors will offer the most opportunity now that Trump will be president? And as for trading, let me offer you some thoughts on the Trump trade. As a veteran trader who began my career during Clinton's presidency, when I had more hair, I've seen how 5 different administrations can impact individual sectors via specific policy choices. But Trump has been unique in his frequent and direct communications with the public via social media. This is different. Whether it is his personal attacks on individual companies, his posts about tariffs, or media coverage of potential broader policies, each of these may impact companies and the market differently. Let's consider a few examples. Trump may post something about tariffs. He did this frequently during his first administration. And those posts created some pretty good volatility at first. But each successive post had less impact. Why was this the case? Because market participants realized that his public posts were a negotiating tactic, and it was rare that they led to specific policy being enacted. We actually have a recent example of a Trump tariff post where he threatened a 25% tariff against our 2 largest trading partners, Mexico and Canada. The market's reaction was a non-reaction. So we already know that we should avoid getting short the market if he posts about broad-based tariffs. This no longer works. And as traders, we only want to focus on what works. I would surmise, even if Trump posted a specific tariff threat on a group of products, there would be little reaction, as the market would be skeptical. For example, if he said something like, we're imposing new tariffs on all foreign manufacturers of automobiles. As a trader, my first reaction might be to get long Ford, GM, Stellantis, as they would be the greatest beneficiaries if imported vehicles became much more expensive. But if a story came out of Bloomberg or Reuters and they cited government officials that were structuring specific tariffs against automobiles or heavy equipment, it would be more likely we would see a response from these stocks. Because in this instance, the catalyst is more than posturing on social media. So we might see buying of the GMs, the Fords, the Stellantises, the domestic automobile OEMs. We also might see buying of Caterpillar and John Deere, who are the largest domestic heavy equipment manufacturers. In fact, we already have one great example of a story that caused a large move in an individual company recently, Tesla. On November 17th, Bloomberg reported that Donald Trump's transition team plans to establish federal regulations for autonomous vehicles. Why did this cause such a strong reaction in Tesla's stock? And can we use this setup to help us establish a framework for future media stories as a strong catalyst for other companies? Tesla had a strong reaction to this story for multiple reasons. Number 1, a few weeks earlier on Tesla's earnings conference call, Elon Musk has suggested that a rollout of robo-taxi fleet would go much more smoothly if there were national regulations. So Tesla had already signaled to investors that a specific piece of news would be good for Tesla. Then Bloomberg delivered on that piece of news. Number 2, probably another reason the stock reacted so strongly is Musk's close relationship with Trump. So investors probably weighted a higher probability that the news story would prove to be accurate. So let's speculate on a few different potential trade ideas or trade catalysts. Trump may trade a block for sale of TikTok that Congress has already required as a matter of law. In the event this happens, I would immediately look to get short Snap. Snap would be the greatest beneficiary if TikTok were forced to close in the US. Here's another one. Tariffs on Mexican cars. I'm not sure how the market would react to this because I'm not sure it would even be legal because the trade deal Trump signed with Mexico and Canada a few years ago. But in theory, it would be most harmful to GM and Ford, who have large manufacturing operations for their vehicles in Mexico. The two potential ideas I just mentioned relate to specific companies, but what type of stories would potentially move the market more broadly? As I mentioned earlier, the market doesn't seem to take tariff threats very seriously at this point. So some other type of story would be needed to strongly jolt the market, the stock market, or the bond market. Let's walk through a few potential scenarios. The first involves the Department of Government Efficiency, known as DOGE, that Trump has tasked with completely rethinking government spending. This is not an actual department authorized by law, so it isn't clear initially how much weight stories related to potential cuts would have. But if over time the market sees Congress working with this department, then market participants are more likely to take actions on news stories related to spending cuts. Here are a few examples of potential market-moving stories. DOGE has identified a path to cut $2 trillion in spending over the next decade. This would lead investors to purchasing long-dated treasuries as federal spending decreases and less bonds would be issued, changing supply-demand dynamics. Also, there would be less inflationary pressure with less spending, which usually entices investors to bid up bond prices. The way to trade this would be via TLT long positions. This is a bond ETF for long-dated treasuries. Another possible announcement would be related to regulations for energy production. Although the U.S. is already the global leader in oil production, there are probably a few actions Trump and Congress could take to make it easier to even ramp up energy production further. The market might sell oil if a story broke that a deal had been put in place by Congress in negotiations with the White House. Another possible reaction from investors would be to buy bonds again because higher oil production puts downward pressure on inflation. And I just mentioned this often will lead to investors bidding up bond prices and pushing yields lower. Elon Musk, who the press has dubbed the, quote, first buddy, has posted recently about drones being the future of warfare, and the expensive fighter jets are obsolete. I have no idea whether or not his statements are in line with the views of military officials, but if it becomes clear that more dollars will be allocated to developing the drone industry in the US, that could cause buying in some lower float stocks that are in this space. Also, it could cause selling in some of the larger defense contractors, such as Lockheed Martin or Boeing. Although Boeing is so beaten down already, my focus would most likely be on Lockheed Martin on the short side. As I'm thinking about this more, the Trump trade is kind of just the Musk trade. Musk is on Twitter 24/7. He comments on everything. He's commenting on Ukraine, he's commenting on Tesla, he's commenting on SpaceX. He also comments on his company's competitors. The other day, he questioned whether Rivian should be receiving a governmental loan. Now, normally, if you're in a position of power in the government, you would refrain from speaking positively or negatively about publicly traded companies that are competing against your companies. Bad optics might seem unethical, but apparently those rules or thoughts never cross Elon Musk's mind. So if Elon says Rivian shouldn't be getting a loan, or there should be tariffs on the vehicles of Ford and GM, or Stellantis that they're producing in Mexico, I would weigh those comments pretty heavily and look at shorts on those stocks. The main takeaway from this video you should have is that professional traders will walk through these potential catalysts before they occur so that they can develop a trading plan in advance. So I'll spend time reviewing the charts of energy stocks, defense contractors, automobile OEMs, and other companies that may receive a positive or negative catalyst during market hours. I then have a good understanding of where the supply or demand has been for those stocks recently, and I can judge the strength of a catalyst by how the stock moves at those prices. If you're interested in learning more about this process, check out the SMB blog or the 2-hour free workshop where I go into more details on specific trading setups. Thanks for joining us.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition, the traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we've found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.